Good evening to everybody out there. Welcome to the free live webinar of SmartFX. I am Almas here, and today I'll be talking about margin trading. If you have attended my previous webinar session, we had discussed a lot of other topics in terms of what is forex trading and what are the factors involved and how can you manage your risk. These were the topics which I had covered previously. Now, to get more deep and into details that what margin trading is, I will be more elaborating on the topics which are there in MT5. Basically, when you open your MetaTrader 5 platform, what do you see? What are those jargons used there, and what does that indicate? So that it will simplify and make it easy for you to understand that what exactly trading is, because I've met so many people, I meet every day, where I come across that people really want to trade, but they don't understand what exactly margin has to do in trading. So margin plays a very important role when you are in trading CFD. Okay, so let's not waste time and get understand in details what exactly margin trading is. All right, moving on to my first slide. Okay, let's say now what is margin trading. Okay, now everybody who are trading or who get themselves involved into forex market, you will be continuously coming across this word which is margin. There'll be people talking about, do you have enough margin in your account? How much is your margin level? Or how much is your used margin? Or how much is your balance margin? So you will always keep on hearing this word margin. So what exactly this margin is? Let us talk about this in more details, what margin is. Now, many of the forex traders, for them, margin is something which is an alien language which they don't understand, and they just want to get into the market and start trading. So today we are going to make the concept of understanding what is margin, so that when you are using your MetaTrader 5 platform, you know what exactly margin is. Now you see this friend of mine, his name is Bob. Now, he's eating some mashed potato and chicken, and he knows that he's eating chicken and he's eating mashed potato. But when you talk to him about what is margin and leverage, he has no clue. You look at his big eyes and he's wondering that what is it? Now he has opened an account and he wants to trade, but he has zero idea about what is margin and what is leverage. Now, what margin trading is exactly. Now, with a very little cash that you have, so let's say if you have an account of, for example, you start an account of $5,000, okay. Basically, if you want to trade big, margin gives you an option where you can trade big with a very minimum amount, okay. And then with a just small change in the price, when if the price is in your favor, what happens, there is a possibility that you can book profit. Same goes the vice versa. When the market is not in your favor, there are chances to lose down your money as well. Okay, but let's concentrate on the word what margin is. Now, for most of the new traders, because you don't know what margin is and how exactly does it work, what happens is when you enter the trade, when the market is in your favor, you are happy because you are making profit. However, the question comes in and you want to understand when the market is not in your favor, what went wrong. Similarly, that has happened with Bob. Okay. Now Bob was actually in a trade. Now Bob was so sure that he has his couple of friends who are already into trading business, and he said that whatever my friend does is exactly the same. The trade goes right, and I just need to listen to them and just do what they're doing it. So what he did, he was in a trade, and he thought that now it is going to be a big win. So he, what he does, he put a trade order where he takes a big lot size and he enters the trade. Now, as what he was expecting, it didn't went as per in Bob's support. What happened is like the trade went exactly in the opposite direction. It didn't favor Bob or gave him profit. But what happened? The funds which were there in bank account, in the trade account, were in loss. Now Bob is extremely confused that what happened, and he's wondering, I had a trade, I had placed an order which was there, I had money in my account, and what happened suddenly? Now there comes the question marks. He immediately calls his forex broker, and he calls him that, there was a message sent that there is a margin call, and the I experienced a stop out. Now Bob has zero idea what is happening. He has no idea. He's clueless. Now, this is why it is very important to understand that what margin is, how margin works, how is it essential in your trading. Because if you don't understand what margin is, you will also be clueless, just like Bob, not understanding what happened to your account. Now, there are a lot of new traders who do not understand the concept of margin. Now, how it is used, how it is calculated, or how it plays an important role in trading. So, what are we going to do today is like, if you have a pen and a paper, and you can keep it handy, because I'll be sharing out with you all a couple of formulas which will help you to understand to calculate your margin, your used margin, what is the required margin, all these things, and it will keep you in control to place trade order as per the margin available in your trading account. Okay, now you see everywhere it is margin. I'm talking about margin call, free margin, margin level, margin required, margin closeout, margin stop out. So what are we going to do is like, there is a lot about margin. So we are going to talk in details about what margin is. Now, before you choose a broker, okay, the understanding margin is very, very important. We at SmartFX makes very sure that our client understand this concept and that then get into trade, because it becomes easy for a person to know that what exactly is happening in the account, rather than just being clueless like Bob. Okay. Now, if you don't, it is as said that, if you don't understand what margin is, what will happen? We will end up like Bob. We will have no idea what happened to our account. Okay. And with that, what will happen? There are chances that your account might liquidate also. So if you really want to understand now how margin is used in Forex trading, you need to understand margin trading very well. So even when you sleep and somebody is asking you, or if there is something in your mind, it should be on your mouth that, okay, this is how the margin works, and I'm so thorough with the margin calculations. Now, this is how, if you see, this is how I've taken a screenshot from a desktop of MetaTrader 5 platform, where you will have certain numbers mentioned here. Like you see what is balance, what is equity, what is free margin. So I'm going to in details, I'm going to talk about all these details here, that what exactly on your MetaTrader 5, the things that you see and what does it indicate. Do not open your MetaTrader 5 platform now. Try to concentrate on the webinar and understand that what important the margin plays, how important the margin word here is. And rather than later on try to implement in your demo account, or if you have a real account, Try to implement on it and try to practice on that, which will make it easier for you to put a trade. Now, as a trader, you need to be aware about the relationship between what is balance, what is equity, what is margin. So before entering into any trade, you have to have this concept clear. We don't want to be Bob. We want to be our own self and understand how margin trading works. Now, make sure that you have a solid grasp of how your trading account actually works and how it uses margin. Why am I saying this across? Because what happens as a new trader in the market, you try to put multiple orders to have a multiple positions and you don't know what is going on in the account. So what are we going to discuss here now in more details? We are going to, let's dive in right now here and understand what balance is, what equity is, what is used margin, what is free margin, and what is margin level. Now all these things, when you have downloaded your MetaTrader 5 account, you have a MetaTrader 5 account, okay, on your account you will see all these details, to which I'm now going to elaborate and make you understand how exactly this works. Now, what is account balance? Now, once you start trading into Forex, you need to open an account. Similarly, if you need to have uh, how you have a bank account to keep your money in your account, similarly for trading, you need to have a trading account. So how will you get a trading account? You will get it through a Forex broker or a CFD provider. So via Forex broker, what do? We provide MetaTrader 5 platform, which helps you to trade the market. Now, once your account is approved, what do? You transfer your funds from your bank account to your trading account. What are you doing? You are transferring the funds to start trading into your trading account. Now, the account you have should be risk capital. Now, every time, and I have discussed this in my risk management session also, that you should only invest the amount that you can afford to lose. We are in a market which is very volatile. As you see a good picture about getting profit, you also have to accept that there are possibilities of loss. You cannot eliminate loss. What you can do is, like, we can always use our strategies, use minimum size of loss, and you can minimize your loss. Loss cannot be eliminated. Profit and loss are part of trading. So make this concept clear in your mind once you are entering the trade, that loss is a part of trading. Okay. Now, the moment you have transferred the money to your trading account, you see the account balance, or simply you can say the balance. Now, what is that balance? That balance is the amount that you have transferred for trading. Okay. So now the cash that you have transferred is equal to balance. Your balance measures the amount of cash that you have in your trading account. So let's say from your bank account, you have transferred $1,000. It means your trading account will have how much amount? $1,000 account. So the first word that you see, the balance on your MT5 account, is the amount that you have transferred to your trading account for trading, is called as the balance. Now, if you add more funds to it, if you add one more thousand to it, then your account balance would become $2,000. Now, if you close the positions and if there is no position or nothing is there in your trading account, your account balance still will be $2,000. Now, when you keep any position overnight or anything, if it is there are any charges, swap charges, rollover charges, then the amount will be debited from your balance amount. Second, what is the second? Second one is the equity. Now, what equity is? Now, equity is, in simple language, it is the amount that fluctuates with the every tick when you are trading. So let's say you have got a position, okay, you have bought gold at certain price, and there is a fluctuation in the market. So you bought gold and the price is going in your favor. So you have $1,000 and it is going $1,000 one, $1,000 two, $1,000 three. So what is happening? Your equity is increasing. Similarly, if there is a loss, if it is going -1, so what will happen? It will come to 999, 998, 997, 996. It will keep on reducing. So what is that fluctuation that is indicating with your open trade? That is called as equity. Now, what is equity? It is the sum of your account balance and the floating profits or losses. Till that time you have not closed the position, your position is open, market is volatile and the amount is fluctuating up and down. On that basis, your equity keeps on moving. What is that? That is your equity. So your current trade rises or falls in value, it packs your equity. So if your trade is in profit, your equity will be in plus. If your trade is in loss, your equity will be in minus. A very simple formula to calculate equity. If to calculate, there shouldn't be, so if you have no trades open, your equity will be equal to your balance. So if your balance is $1,000, your equity will also be $1,000. You see, I've given an example here that if you have no trade open and if you have deposited $1,000 in your trading account, so your equity is how much? $1,000. How much is your balance that you deposited? $1,000. You have zero positions open, you have no trade, so your equity is also $1,000. Now, going little further advanced, let's calculate. Okay, now you are a big fan of Shah Rukh Khan and you just follow him religiously. Whatever he does, you just want to follow him. And because he's Shah Rukh Khan, this morning he wakes up and he says that, I feel that JPP USD is going to fall down. And since he's Shah Rukh Khan and you are a big fan of Shah Rukh Khan, what do? You follow exactly what Shah Rukh Khan tweets. So what happens? The moment he tweets, you also place your order. Now, when you place their order, whatever Shah Rukh Khan says, it doesn't go in the favor. The trade is in loss. So what happens? Now there's a $50 loss. So your equity will be your account balance plus the loss or the profit. So how much was your balance? $1,000. Now since Shah Rukh Khan tweeted and the trade is in $50 loss, what happens? Your floating loss is $50. So 1,000 minus $50. So what is your balance? $950. Similarly, as said, see, as shown here, that your balance was $1,000. Your floating loss is how much? $50. So what would be your equity? It will be $950. Now, similarly, taking example of Shah Rukh Khan, the other day morning, he gets up and he again tweets. Now this time he has changed his mind. He say, I don't want to short JPP USD. I'm going to buy JPP USD. Now, since he's Shah Rukh Khan, he's King K and you follow him, you do the same thing, what he said, and bang on. What happens? The trade is in your favor. It gives you $100 profit. Now in this scenario, what happens? Your balance was $1,000. You followed Shah Rukh Khan and the trade went $100 profit. What is your equity? $1,100. So your account equity will continuously fluctuate with the current market price as long as you have open positions. Whatever your position is, whether if it is in plus, your equity will be in plus. If your position is in loss, your equity will be in loss. So the floating profit and losses will indicate your equity. Coming on to the next point, which is used margin. Now, what is used margin? What does this mean? Now, in order to understand what used margin is, first we will understand what required margin is. Okay. Now, whenever to open a position, you have to have a required margin. Now, let's say you have deposited you have a balance amount of $1,000. Okay. Now you want to trade in gold. Gold rate is going on 1650. Do you think with $1,000 will you be able to place a 16-15 dollar request? No. So what happens here? If you have position open, okay, what we do is like we will have a required margin which will be blocked from your position size and will help you to trade. Okay, now all the required margins. So if you have multiple positions open, 1, 2, 3, 4, 5, you have multiple of trades. What you will do, you will calculate each margin separately. So every margin separately will be calculated, and that will be your used margin. I know that you have not understood this point. Will be sharing an example here, which will help you to understand in a better way, okay, what exactly it is. Now, while required margin, so here we will take an example that you have deposited $1,000 in your account and you want to open two trades. That's two positions. Okay. Now the two position is like you are going to go long. When I say long means buy, you're going to buy USD JPY and you want to open one mini lot. I had already discussed about in my previous webinar what is mini lot, standard lot and micro mini lot. So we are talking about mini lot. So mini lot is 10,000 units. What is a micro mini lot? 1,000 unit. And what is a standard lot? It's a 100,000 units. So we are going to long USD JPY and we will open one mini lot. Okay. Similarly, we're going to have a second trade also, which is again, we are going to long USD CHF and we will have one mini lot unit. Okay. Now, margin required for USD JPY is 3% and your margin required for USD CHF is 4%. Now, how are we going to calculate our margin? How much margin we need here to open each position? So for USD JPY, we are going to calculate first. Margin required is how much? 4%. Now, assuming your trading account is, the base currency is USD, so the required margin will be how much? $400. How have you calculated it? Very simple formula, number of units. What is the number of units? It's the mini lot. Mini lot is 10,000 units. How much is the percentage that we are taking? 0.04. So what is the margin required? $4. $400. Okay. So to have one one mini lot for USD JPY, if the percentage is 4%, how much is the margin requirement? $400. Similarly, for USD CHF, you're going to use same formula, number of units into margin required is your margin required, which is 3%. So 3% calculated will be how much? $300. So in total, margin required for USD JPY is 400. Margin required for USD CHF is 300. Now, how much is the account balance that you had deposited? $1,000. How many positions do you have? Two positions. One position has how much dollars occupied? $400. Second position, how much dollar occupied? $300. When you add up, what is the total? $700. So from $1,000, how much dollars you have used? $700. So what is the margin that you have used? You have used $700 from $1,000. So you have two positions open. So how have we calculated? What is the used margin here? You have used $700 to get two positions in your trading account with an account balance of $1,000. So I hope the concept of used margin is understood. Now, what is a free margin? Now, margin can be classified in two ways, either used way and a free way. I already showed you how to calculate used margin. Okay. So used margin is what? It is just the aggregate of all the required margin. Aggregate of all the required means there might be multiple positions. Like we had two positions there, 4% and 3%. So $400 and 3%, $300. So sum of that, those are two required margins. So sum of that is equivalent to your used margin. Now, what is free margin? Free margin is the difference between the equity and the used margin. Free margin is also what? It's the usable margin, because that margin is what you can use to place a new trade. How do you calculate free margin? Now, whatever your equity is and whatever your used margin is. So what is your equity? Equity was $1,000. How much is the used margin? You have two positions open, which was $700. $700. So equity 1,000 minus $700 is equivalent to $300. So what is your free margin? $300. That is how you're going to calculate your free margin. Moving on to the next slide, what is margin level? Now, this margin level is the percentage. It is the percentage that will help you to understand how safe is your position or how safe is your trade. It allows you to understand the funds that are available for your new trade. So if you want to place a multiple trades, this will give you a fair picture or an idea in a percentage way, which will help you to put trades accordingly. Now, the higher the margin level, the more free margin you have available to trade. So, how are we going to differentiate the percentage? Like the percentage would be always higher, like 300%, 400%, 500%. So, if your margin level is 500%, 600%, 700%, it means you have free margin to trade. Now, lower the margin level, like the margin level is 300, 200, 100. It means the free margin, there is no margin available for you to trade. So this might end up, the lower your margin level goes, this might be an indication that your account will have a margin call. What is a margin call? That your account needs to be funded to keep your trades open. Now, how do you calculate the margin level? Margin level is equal to your equity divided by your used margin into 100%. Now, you don't have to do this by yourself. On your MetaTrader 5, automatically when you are placing a trade order, you will automatically know how much percentage is there. It will give you a percentage. The last on your MetaTrader 5 platform, it is written on the bottom what will be the margin level in percentage. However, as said, that it is very essential and it is important to know how to calculate margin, how to understand, because this will help you to put trade accordingly. Because if you have multiple of positions open and if the market is not in your favor, then there are chances that your account might go to a margin call. Now, very simple. If you have no position open, again, we are going to have the same example. If you have no positions open, okay, what will happen? You deposit $1,000 in your trading account. So first thing, we are going to do is like we are going to calculate our free margin. Now your account balance is zero. There is no positions open. So means your account balance is $1,000. Your equity is also $1,000. Now you have no positions open. So your free margin is how much? Your free margin is also $1,000. Now, why your free margin is $1,000? Because you have no positions open in your account. So there is no margin being used. So everything is $1,000. Making it a little more interesting, taking an example, okay, here let's say you have again an account balance of $1,000, okay, and you go long, again you want to go long USD JPY and you want to open one mini lot. One mini lot is again 10,000 units. What is the percentage required? Margin required here is 4%. So how much margin you're going to calculate? Again the same formula here, number of units into margin requirement, which will be around $400. So $400 is your $1,000 is your account balance. How much is the margin used required? What is the margin required here? $400. What is the used margin here? Used margin is $400. So 1,000 minus 400 is equivalent to $600. So what is the amount left? $600. So what is your free margin? $600. Now that we know that the equity you have already calculated your margin requirement, you have already calculated what is your free margin, and you already know your what is your equity balance. Now how will we calculate margin level? How much is the equity? Equity is $1000. What is the used margin here? $400 into 100%, which means if you calculate, it will give you 250%. So what will be your margin level? Your margin level will be 250%. Now margin level is as good as your traffic light signal lights. Okay, I've elaborated here again. If you see this margin here, used margin is how much? 400. Free margin is how much? 600. What is your equity? $1000. How much is your balance? $1000. From 1000, how much we have used? $400. How much free margin you have? $600. Now I said that your margin level is as good as your traffic light. Okay. The higher the margin level, the more positions you can have. The lower the margin level goes, the risk, what happens is it's very high risk, and it will not allow you to have multiple positions or trade. So you see about 200, there is always a green light. 150, it gets a bit dim. Below 100, there might be some brokers who might not even allow you to put a positions, because at this point of time you have already used the complete amount, or with your current positions it is not favoring you to open a new position. Okay, so below 100 level, normally it's a margin call. So if the margin level is 100% or less, most trading platform will not allow you to open new trade. But as long as the margin level is above 100%, then your account is at a green light to continue to open new trades. So when you're trading, keep this in mind, that if your margin level is above 100%, you are, it is good to trade. But if it is below 100%, your account is at margin call, and it is at risk. It will not allow you to put a new trade. Okay, so I have cleared all the details about margin trading. Okay, what it is, what margin is, what used margin is, what free margin is, what margin call is. What we will do now is, like, in the option, in your chat option, you will see there is a chat box where you can jot down all your questions, and I would try to answer maximum of them. Whatever questions related to the webinar you have, or if you want to know more in details, I will try to cover up maximum of them. So on your right hand side, do you see a chat option box here? I see a lot of people have joined. So please feel free to put down your question so that I can try to answer maximum of them. So my friend has also mentioned the office address here. All right. Uh, we have our office in Business Bay. Okay. If you have any doubt, or you can personally come, and we are here based in Business Bay from last 7 years, building 6 Bay Square. Also, my direct number is mentioned there. So just in case if you have any doubts or anything, you can also feel free to coordinate. So guys, come on! I don't do. Is that was the session so clean and clear that there are no questions? Great. So I have Komugisha. Thank you, Ma. I hope you've understood, and it's my pleasure uh, to be connected with you. Great. Yes, guys. No question. There are no questions, guys. Anything that you would like to know more about margin trading, or the concept is clear? So clear. So Roylan has a question here. What will happen to your open trade during margin fall? So till the time you have the equity in your account, Roylan, and you, as said that if your margin level is above 100, your positions will be open. In case if your uh, margin level goes below 100, you will get a call from the representative either to fund the account, and if you don't fund the account, the positions will liquidate close by itself once it hits, because it doesn't have the funds to hold the trade. Hope that is answered. So that is yeah, that is why it is very important that when you take a trade, like people just randomly close their eyes, and even understanding that how many units are there or how it is calculated, you can just go for a big one lot size. See, if the market is in your favor, yes, definitely you will make profit. But we are in a market, or we are in a trading business where market is both the ways, it goes up and it goes down. So it is always advisable to take a minimum lot size, to have your risk reward ratio and trade. Always put stop loss if you are a new trader. Again, loss is part of trading, you cannot eliminate it. What we can do is like minimize it. Okay. So Kumosha is asking, I supposed to fund the account every month to trade. It is not necessary. If you are making profit, you will not need to trade. It is up to you what you are looking like. If you want to get in a day, if you are an intraday trader, and if you trade like almost around 20, 30 trades, 40 trades, not all the trades will always be in your favor. You only have to fund your account when your account is giving you a margin call, or if there is insufficient fund in your account to not, which cannot hold your position, then is the time that you have to fund the account. Hope that is answered. So funding is exactly, it's when if you have a position, multiple of positions, and if the more positions are not in your favor, then comes a time to keep your positions open. You will definitely have to fund the account. But if the market is in favor, you are doing your trade very well with your sufficient amount of margin level, then there is nothing to worry about. You're safe to trade. This question comes only when you do extremely aggressive trading without any knowledge. Any more question, guys? Great. Swap. What is swap? So swap is basically if you hold your positions, okay, uh, like say if you're trading in gold and if you're holding it overnight, then there are charges for it to hold the positions. That is called a swap. When you hold your positions overnight. No worries, Ryan. So is that answer? All the questions have been answered. Any more questions or queries, guys? And as said that, we at SmartFX, we firmly believe in making our client educate, because knowledge is important when you are doing something, and without knowledge, just entering the market is not going to favor. I keep conducting webinars every Friday, and there's a lot of other topics which I have spoken about. So if you are one of it who is new to trading, it is good that you see, because there are good it would be good for you to join the webinars, because what happens is like, uh, there are a lot of people that I come across, a lot of new clients who wants to trade but have zero knowledge about what is what. So it is always good to learn first, because earning will automatically comes once your learning is proper. That's a piece of advice that I would give to all the new B or new traders who are here, to understand what basic things are, so that even this concept of margin, it is very important to understand that how much your money is and how much you have used it, because it will help you out to keep your trades open, and you'll not end up using everything or lose on your equity. So I hope I have answered the questions, and I'm looking forward, just in case if you have any doubts. All right, since I'm not getting any more questions from your end, I believe that everything is answered and it's clear. However, we will end this session now, and we will meet next Friday again with a new topic, where I'll be discussing more in details about the trading patterns. All right. So keep yourself free, uh, register yourself, understand, because this is something normal. Generally, if you want to go for any kind of webinars, or you want to attend any kind of seminars for trading, they are all chargeable. So anything whatever you're getting for free, it is always good to attend and understand, because you are gaining knowledge. Okay. So please feel free to connect with us. My number is there, email ID is there. You can anytime also connect and come to our office at Business Bay. As said, we are in building 6 at Bay Square. All right. So I'm ending up my session here. Till then, take care and have a safe weekend. All right. Bye.